Hey guys, how are you doing? I hope everything is going well. I hope you're enjoying your weekend. Sorry for the delay that happened today. We just faced some technical issues, but we're here now. Hi and welcome to the first live session. I'm Mohamed Karmous, CEO of QMK Consulting, where we partner with restaurant owners to tackle financial challenges and build thriving businesses. So today's session is inspired by my latest ebook, Seven Financial Mistakes That Put Restaurants Owner Out of Business. If you haven't read it yet, I highly recommend and encourage you grab a free copy today. It's packed with actionable tips to avoid the pitfalls that often trip up restaurant owners and threaten their success. So, one of the biggest mistake that I discussed in the ebook and the one that we will focus on today is the poor restaurant cash flow management. And I'm pretty sure that, like a lot of our followers today, um, they already, like we discussed that before, they read it in the book and they face it day to day. Like I hope you're not, like having any financial problems or any cash flow problems. But as we go today, if you're facing this problem, we're gonna work with you. We're gonna work very hard, to tackle all these issues and find a good solution for it. So I know you're working very hard. You're juggling everything, managing staff, delivering amazing food, and trying to keep your costs under control. But what happens when the money coming in doesn't match what's going out? So this is where the real big cash flow, or where the cash flow becomes your biggest ally or your biggest enemy, right? So cash flow is the heartbeat of your restaurant. It keeps your doors open, your staff paid, and your suppliers happy, right? So by the end of today's session, you will have a clear understanding of how to manage your cash flow effectively and stop feeling like you're always playing catch up. All right. So by the end of this session, you will walk away with six powerful strategies to take control of your restaurant's cash flow, reduce financial stress, create a more predictable and profitable business. These are the same strategies I've shared with restaurant owners who were struggling to stay afloat, and after implementing them, they saw significant improvement in their finances. And we will give a lot of examples today. So, whether you are dealing with fluctuating revenue or unexpected expenses, or just feeling that like there is never enough cash in the bank, stick with me because these strategies can make all the difference. And if this topic resonates with you, be sure to download my ebook for more insights. So, let's dive in. All right. So, let's start with the first problem that like a lot of restaurant owners facing. Okay, so let me know in the comments if you ever had time or where cash flow made you feel stuck. Maybe you had a busy weekend, but by Monday you were still struggling to pay your bills. All right. So I hear stories like this is all the time from restaurant owners, and we're going to start with the first big problem here, tight margins. All right. So I hear stories like this all the time from restaurant owners, like a surprise equipment breakdown and drained, like that drains their server reserves. I'm sorry. A carrying client who didn't pay on time, an off-season lump that left them scramble, for funds. So cash flow issues aren't just frustrating; they are exhausting. And the worst part, even when your restaurant is profitable, poor cash flow can bring everything to a halt. Okay, so here's why it happens. Okay, so and with the first reason that we have here, the tight margins, a lot of restaurants that I've been, like came across them in my career, they operate on incredibly slim profit margins. So even the small disruption can throw off your cash flow. So this is a big problem, and I'm pretty sure a lot of like restaurants, especially in, I'm not talking about the fine dining or the upscale restaurants because that's a different field. Like I'm talking about pizzerias, they face that. Fast food, like type of restaurants, they face that, and they usually have a very slim margin because they want to be competitive. They can't increase the prices, and they end up trying, to trim down as much as possible from this reserves, which causes them to be running on a very, very small margin, which they don't have enough cash flow in the bank. So this is one of the first reason. And we're gonna mention the solutions after this, but right now we're just mentioning all the problems. So the second one is seasonal fluctuations, right? So if your revenue drops during certain months, like summers or post holidays, it's easy to run out of cash when you need it the most. So one of the main problems I see a lot of seasonal restaurants, like they face is that they don't anticipate for the future. They don't do forecasts. They don't do cash flow management, like to help them anticipate where are the financial gaps. Okay, so this is the second one. So the third one is delayed payments. And I'm pretty sure right now, like everyone or every restaurant owner here, they had, like your share of jumping between POS systems trying to find the best. So the late payments can really create a problem for restaurants, like with different types, like if whether it's catering clients you're dealing with or delivery platforms, payouts, waiting for money to come in can leave you scrambling. And this is one of the issues that you need to tackle, like at first. It's a priority and you can control that. So most of the issues I'm mentioning right now is controllable. You can control it. And that's why we're discussing that today. So the unplanned, and the last one is the unplanned expenses. And this is one of the issues that, like sometimes it kills your operation and it can force you to go and get like a loan from like a shark, or get like a private lending with high interest, and eventually it starts eating, like your slim margin, and you end up, like in massive amount of debt. So what can we do to like to do that, especially with unplanned expenses? I'm talking here about equipment breakdowns or sudden price hikes in supplies. This can, like drain your reserves, it like in instant. So you need to be prepared for things like that. All right, so if this is all sounds familiar, I'm telling you, you're not alone. Okay. And the good news is that there are proven ways to take control of your cash flow and stops the cycle of stress and uncertainty. Okay. All right. So let's discuss about the solutions now. Okay. So we have six strategies that we use to, like to with most of the restaurant that we work with, and they are very, very effective. Like when they are implemented in the right way, you will be able to definitely overcome the four challenges that we discussed before. All right. So now let's talk about the solutions, because we're not here just to talk about problems. All right. We are here to fix them. So here are the six proven tax strategies. Let's start with the first one. Okay. Create a cash flow forecast. I'm pretty sure a lot of restaurant owners, they either do that with a professional accountant, or whether you do it like by yourself or with a professional. It's very, very important. But if the problem is if we don't do it at all, okay, then I'm 100% sure right now I can guarantee you're leaving a lot of money on the table. Okay, so what can a cash flow forecast do? Okay, so this is the foundation of cash flow management. Let me tell you that. That's why I'm starting with it. So by forecasting your income and expenses for the next 6 to 12 months, you plan ahead for slow periods, unexpected costs. So picture this. You know exactly when your busy weeks are, slow months are coming. Like with a cash flow forecast, you can plan for those ups and downs and avoid getting blindsided. And like again, this is the worst that can happen to a restaurant owner. You want to know exactly when is your next maintenance for this equipment. When do I have a big liability to pay for my vendors? What is the slow months is that I need to cut costs down and find a way, like to leave more reserves in the bank. So I work directly with restaurant owners to create custom cash flow forecasts tailored to their business cycles. So what we do is we analyze your business and the type of your restaurant. We analyze the cycles where you have, like increased revenue and like the other season that you have like low stream of income. And with the experience that me and my team has, we will map out your revenue and expenses in detail so you're always prepared for what's ahead. And like again, information is power, knowledge is power. If you are equipped with enough knowledge and enough information, you will be ready for anything in the future. And this is one of the things that we will be able to help you with and equip you with that knowledge. So that's an example for a restaurant I worked with. It's an Italian upscale restaurant in New York City. It struggled every summer because of slower foot traffic. Together, we built a customized 12 months cash flow forecast. We analyzed the revenue patterns, pinpointed slow periods, and created a plan to allocate resources during peak times. So the it doesn't matter, like with what like a lot of restaurants they say like summer is the biggest like season for us. Summer is where we actually make a lot of money, but like sometimes this doesn't go as planned. So you need to make sure you analyze that using actual records, using actual, like experience, because like sometimes there is another restaurant that actually taking a good portion of your like of your clients. There is an increase in your price that took around 30% or 20% down of your incoming customers. So we need to be prepared, and with analyzing all this, you need to anticipate the increase or decrease. All right. We also added like a lot like we can help you with the pricing strategies. Like for example, we can help you create summer promotions to boost revenue, like and by the end of this like of the year, you'll find that you have your cash reserve increases by certain percentage, because if you are going to give certain promotions or certain invest a little bit in marketing, like to help you overcome a certain challenge, you need to make sure that you are accounting for the return on investment from this. The ROI is very important. So a question for you here: how often are you looking for your financial reports? Weekly, monthly? Please, if you are with us today, share in the comments. All right. So now I'm going to move on to the second point, all right, which is also very important: build an emergency reserve. Okay, I know a lot of restaurant owner, they're gonna say like it's easier said than done, but we definitely, this is something that you can do, and I can guarantee you that it's a way you manage your cash and inflow. Every person has a certain understanding about how to manage their money and how to manage their income. And when we address on, like, when we understand your mindset, when we understand, like what is your expectation about money, like how do you deal with money? This is where we're gonna start customizing something that fit, like your industry is gonna fit, like your understanding, fit your style, and you can use that to increase your like your cash flow. All right, so going back to that point, building an emergency reserve. So imagine the relief of knowing you have 3 6 months worth of expenses saved for unexpected emergencies. If it's not just peace of mind, like it's just your safety, it's your safety net. All right, so pro tip here: start small by saving 2 to 3% on your weekly revenue and watch it grow. 2 to 3%. It's not going to make a big difference. Like let's say if your restaurant makes $10,000, $15,000, like a week. Okay, so let's just take 2% out of that, put it on the side, and just leave it as an insurance for you for against any problems that you might see. I always advise my clients to create a saving account and make this account as this is a provisions for uncertainties. This is a provision for anything that you're not like prepared for. All right. So the second thing we're gonna talk about here. Uh, all right. So we're gonna move now to the third point. I'm sorry. All right. Negotiate better supplier terms. Okay. So I'm pretty sure a lot of restaurant owners are gonna think like we have the best suppliers. We know, like our suppliers, and they trust us. They give us the better, like the best deals. If that's the actual case, I applaud you. Like you're doing well. But I can prove you when we sit together that there is always a better deal. Like if you think right now your supplier is giving you better terms, giving you more flexible time to pay your dues, there's always a better deal. I trust me on that. So I'm gonna ask you this question. Did you know you can ask your suppliers for longer payment terms? A lot of business owners that can know that, but if you don't, this one change could like could give you an extra breathing from room, like extra breathing room each month, and you will be able to do a little bit more with that reserve. Trust me. So sometimes like a lot of people think like, oh, to cover my deficit, I need to increase my revenue. It's not just increasing the revenue. Sometimes saving money is making money. So if you are able to reduce the amount that you pay or increase the period, like to get better terms or better payment terms with your vendors, this can also, you will start seeing a lot of relief in the bank, and you can use this money for better things, better marketing plan that can increase your customer volume. And this is one of the things that like a lot of people like, all usually oversee, and they don't focus on it. So it's better. So align your supplier payments with your revenue cycle. It's very important. Okay, so you need to make sure that the suppliers you're working with, they are matching your revenue cycle. If you are working on, like your best season is the summer and the spring, then you need to make sure that your suppliers understand that during this season you will be able to pay them faster, you'll be able to pay them better. But during the other seasons, like they need to give you, like a more flexible terms. And this is one of the things that usually you can utilize in your negotiation with the suppliers. Gives them a full picture about your revenue cycle. So they wouldn't expect the constant stream of expense going from your business on a monthly or a weekly basis, because the suppliers, and at the end of the day, they don't know if you don't explain to them. All right. So by aligning your supplier payments with your revenue cycles, by requesting extended terms, suppliers are often willing to work with you, especially if you've built a strong relationship. I know like a lot of established restaurants, but this idea never crossed to their minds. If you're doing this again, you're doing great. Keep doing that. All right. So another question for you here. Have you ever tried negotiating with your suppliers? If not, let me know. I can share tips on how to approach them, what is the best strategies. And we've done that, and we were successful in doing it with many restaurants. All right. So this is the third point. Negotiate better supplier terms. All right. Now moving to the fourth point. Encourage faster payments. All right. So how can we do that? All right. Offering a small discount for early payments can make a big difference when cash flow is tight. If you cater, and this point is mainly for catering businesses. Okay. If you cater or host private events, this is a great option. Okay, faster payments mean better liquidity. So I know a lot of catering businesses, they take a very small down payment, and the big portion comes, like comes after the event. So this is very risky, especially that, like a lot of things can go wrong when you're doing catering services. And I know, and I'm pretty sure if you're doing it, how wrong it can go. And it's very important to secure yourself, make a payment plan for like for the customers, so they can so you can encourage them to pay the money as fast as possible and secure yourself, right? Don't spend expenses, don't spend like like on catering, or don't spend on private events if you are not securing. The down payment should always secure that. So you need to make sure that you have the safety net, and your down payment covers your like your expenses. So in worst case scenarios, you would walk away with a break even. All right, so this is one thing. So we're gonna move to the fifth point: optimize inventory management. So but again, I can see uh in the comments here, Hosam, thank you for I believe weekly would be the best, however monthly is the most feasible approach. That's very like it's a very good point, like, and a lot of people, they mention that. And again, it differs from one restaurant to another. So if weekly is working best for you, because it depends on the workload. If you have a lot of workload, weekly can actually be very beneficial. If you have a lot of, like transaction, if your cycle depends more on a weekly basis, then having a weekly cash flow is definitely going to give you better vision than a monthly cash flow, because monthly you will do just one time a month, and in the middle, like in between, you're still in the dark, like. But if it depends on the size of the restaurant, it depends on how big is the restaurant operation. So it's all depending, there's many factors to it. But thank you for the comment, Sam. So I'm gonna move back again to the fifth point, which is optimize inventory management. So how much money is tied up is in unused stock right now? Okay, so use sales data to adjust your orders and avoid overstocking. It's a very crucial, because I know overstocking is one of the worst things that can happen, because the amount of waste that you can face at the end if you didn't anticipate for the volume properly. And I know a lot of restaurant owners, they do that out of the back of their mind, out of their own experience. But again, it doesn't always go as planned. So you need to make sure to analyze the data, analyze the trends, and the historical trends that you had, so you can anticipate for the future. So I've worked with countless restaurant owners to set up efficient inventory systems that reduce waste and free up cash. So together we will analyze your sales trends, streamline your orders, and ensure you're not over investing in stock you can't use. All right. So there's one example of a seafood restaurant I worked with. They were losing money due to overstocking perishables. And I helped them integrate their POS system with inventory software that conduct weekly audits. And we consolidated ingredients across their menu. So if they are overstocking or getting, they have like a lot of options on their menu that they use different ingredients, or that requires them to diversify their ingredients. I made sure that most of the options on the menu, they use like almost the same ingredients, so we can have better tracking and better storage system for their inventory. And the result, they cut their inventory cost by $8,000 annually. Like improve their cash flow and reduce the waste of the food of 15%. And that's a very good number. Like for a seafood, how seafood, like especially it can go back like very quickly. And if you're talking about like a storage system, or like that the amount of complexity that they require, the amount of work they need, like it usually forces them. And I know that a lot of restaurant owners that serve like seafood platters, they serve seafood options, they face the same issue. Like they face a lot of waste at the end of the period if they didn't anticipate for that the proper or workload. And it can result at the end of the day in a bad customer experience. So to manage that in a better way, We need to make sure that we cover that by having a good system that tracks exactly how many plates we sold out of this. And when we track the numbers, the number will always guide us to the right answer. All right. So this takes me to the sixth point, which is know your break even point. So by implementing the last 5 points, this is how we're going to get there. All right. So knowing how much revenue you need to cover your expenses each day helps you make smarter decisions during slow period. I specialize in helping restaurant owners calculate their break-even point and apply that knowledge to their daily operations. So with my guidance and everyone, and I mean also the everyone in QMK, the whole team, they are experienced with restaurants operations. They're experienced on how they can give you this end result. Like you will gain the confidence to navigate through financial periods and make decisions to protect your bottom line. So I want to make sure that by the end, like of implementing this six strategies, you're gonna get increased profitability, better cash flow management system, and which will allow you to have, like more money on the table to do the things that invest in the things that matters for you the most. All right. So there's another example that I was able to do for like I'm sorry, I have another comment here from Sam. Would you recommend a system to manage the inventory? There's many software depending on which restaurant type you are in that we can use to manage inventory. Like then there's also a lot of integrations that you can use depending on the POS system. I cannot give you specifically a certain name right now, but depending on the POS system that you're using, some of them they can accept integration, some others they don't. So like Square, Toast, Caviar, these are like softwares that actually they have built-in inventory management systems, but for certain restaurant types, it's not going to be the best. We're going to have to compensate with external inventory system designed only for restaurants. And this is something that we can discuss together. Like when we go on the call, we can recommend for you what are the best uh, inventory management systems. Thank you for your question, Sam. So here is an example on the restaurant that I was talking to you about. I worked with a barbecue restaurant owner who didn't know their break-even point. We calculated together by analyzing their fixed and variable cost to see exactly where's the problem at. So with that knowledge, they set the daily sales targets, promoted high margin menu items, and boosted their net profits by 10% within 3 months. So I just want you to imagine, like the increase and like the happiness of that, like when you apply something and it works, this can be you, and we were able to implement that easily, and by the reports that we can generate for you, you will be able to use this information, digest it so easily, and implement it in a very, very smooth way with your operation. All right. So a question for you here. Do you know your break-even point? Do you know how much do you need on a monthly basis? And if and how much like, what is your threshold? If not, drop a comment and I will explain to you on how to calculate your break-even. All right. So now like this with this six solution, when you implement them, you will have the power, like to control your cash flow. All right. So how can QMK Consulting help restaurant owners? All right. And why, like, would you decide to go and work with us? I'm pretty sure, like some of you here, they already are working with accountants, or you have a professional helping you with, like managing your system, managing your cash flow, having a good financial reports. But what is the difference? that we do that can make you shine. All right. And so cash flow management isn't a one size fits all. Your restaurant is unique and your financial strategy should be too. So, I'm pretty sure, like there's a lot of accountants that they understand very well how restaurants operates, what are the problems that can face restaurant. But when you're working with, like this accountants, they don't only serve restaurants, they serve other clients as well. And when you are working with someone who understands only restaurants, they understand only the operation of a restaurant and how what happens in the kitchen, what happens out there in the dining room. This will, make things easier for us to understand your lingo and, yeah, implement our accounting knowledge in put it in better use that fits your restaurant. So we do, like a set of five things that, help us, like be unique, help us provide you with a service that is not comparable with other services in the market. So the first thing is we build customized cash flow forecast tailored to your business cycle. That's the first thing we do. So by customizing our cash flow to your business cycle, you can, like imagine this, that's an easy thing. I can do that by myself. But like when you have a complex restaurant, when you are on the verge of growth and you're, planning to go to be a franchise, these are things that require different calculation. It requires different degree of sophistication that will help you at the end of the day get a simple, easy, simplified product, like that you will be able to understand, digest easily. So the work we do in the back end, the complex work we'll do on the back end will end, like you will receive an end result that is easy to digest, easy to use, easy to read, to help you take your decisions faster and make calculated decision based on that. So when we build a cash flow tailored to your business cycle, this will help you better manage everything, and you will be able to see that this side, the money that you have on the table is more because we manage your expenses and your revenue to be matching together in the same periods. You're not, collecting in in later periods when you actually need the money for. So this is the first one. The second one is identified unnecessary expenses and streamlined operation. So right now, a lot of restaurants owners I've worked with, when you start a new restaurant or you even have an established restaurant, sometimes you are under that certain imagination or understanding that this expenses we cannot, we cannot remove this expenses. This expense is like a sunk cost on us. We have to pay it. We have to deal with that. There is many creative way that you can consolidate certain expenses by analyzing your restaurant operation, the flow of work, how it works. We will be able to understand where is the duplication, where is the unnecessary points in your operation that is creating additional expenses. And by eliminating that, we will start first streamlining your operation, and you will start seeing that right now there's a lot of things that got consolidated, a lot of things that is simpler, easier, and at the same time, like it will reduce expenses, not increase it. So how can we have the knowledge for that? Me myself, most of my team, we all had like an audit background. I come from KPMG myself. Like we all come from an audit background. And before auditing the numbers, we used to audit the operation. We used to audit the process, the workflow. And by understanding what is a workflow, what is the process, we like we start identifying where's the risk, where's the fraud, like where's the issues here that can create additional expenses, or the issues here that can increase the risk of this business being or going into a default. So, and with that, it helps us audit the numbers later on. So we use this knowledge and we reverse engineer it, and now we are helping it in establishing a more efficient, more effective, streamlined process for your restaurant, depending on the type of the restaurant that you have. No matter if you are an upscale fine dining or a fast food restaurant, a pizzeria, a coffee shop, we know it all. We know how to streamline the operation for these types and for any type of restaurant. And we are currently working with hundreds of restaurants here in the US that we were able to streamline their operation, help them save tremendous amount of cost on their profit and loss. So this is a second one, and the third one is negotiated better payment terms. So together we will work, like me, our team and was like the whole team will work with you, um, and we will start analyzing all your suppliers. We're going to see all the payment terms. We're going to ask you for, like all the contracts that you have with the suppliers, and we will start, like giving you certain strategies that you can use depending on the payment trends that you pay them. And depending on your negotiation, we're going to start making like a qualitative test for these suppliers to see their effectiveness, to see like how flexible they are. And based on this qualitative test, we will start putting certain strategy for the ones that we're gonna like we're gonna put them in, let's say, three categories: A, B, C. A is the best types of suppliers. These are the ones that they are giving you the good deals. They are allowing you to have better cash flows. They are working with you, not against you. So, and by and C, let's say these are the worst ones. It are the ones that they need their money right now. They have to be paid upfront. There is no flexibility with the payments. So these are the suppliers that and these are the ones that you need to eliminate or find an alternative for them. All right. So we will start working with you on freeing up thousands in working capital and negotiating better payment terms with these suppliers specifically, and or help you replace them with better ones. Right. So before getting to the next point, I have here Ashley Mullen. Hi, Ashley. How are you doing today? I hope you are enjoying the weekend. So you mentioned to me how we calculate the break-even point. So the break-even point is basically, like your current cost, your variable cost, versus, like every, like all your income that you're making. So right now, if, in order for you to calculate the break-even cost, it's gonna be very hard to explain it right now in one session. We can definitely hop on a call together, and I'll be more than happy to walk you through what is the steps, what we can implement, so we can get into that. But like I would, if you don't know what is your break-even point for your restaurant, I would be more than happy to help you identify that. And this is something that we specialize in. Right. So we're gonna I'm gonna move back again to the fourth point. So yeah. So again, to the fourth point, we will guide you through calculating and applying your break-even point. Like it was actually matching right now was what Ashley just asked, to make smarter financial decisions. All right. So like with this 4 points that we just mentioned, like you will be able to have a service that stands out for many different accountants, and we guarantee the results many times. Like so we don't just provide advice, we roll up our sleeves and work alongside you to create a financial system that works for your business. All right. So right now, um, let's hear you out. Like it's your turn. Drop your question in the comment. I will answer as many as I can live. And I have three questions right now I wanted to ask, and let me know. Like let's have a discussion together. So, have you struggled with unexpected expenses? Okay, so let's talk about how to plan for them. Okay, so this is the first question. All right, and the second question: do you need help figuring out your break-even point? I will share a simple formula with you. All right. Okay, and the third question: not sure how to approach suppliers for better terms? Okay, we can give you a quick script that works for that. Okay, so this is the third one. All right, I'm here to help, so don't hold back. This is a great opportunity to get personalized advice. And again, like it's Sunday. We are like here together. I want to make sure. I know this is it might be a busy day for a lot of restaurants, which is a good thing. I always love like seeing successful restaurant, and making more money on the weekends. And if you are still a starting restaurant, we can definitely help you get there, and you start making like a killing revenue. All right. So one of the main things that like we face usually was especially with new restaurant owners. They just started like within a year, and there's a lot of things that they face, especially in the first year. You start paying a lot of expenses. There's a lot of cash flow going out. So most of the question that I face is like, how can I manage that? Why are we making a loss? Like we invested in a business, we want to start seeing revenue. But until now, this is the ninth month, this is the 10th month, we are barely making it. So a lot of the problems, like when you start a restaurant, you are fixated mainly on the basics. You're fixated mainly on the expenses that, like, or the operational expenses. You're fixated mainly on increasing and getting client as much as possible. But, like, you usually oversee that when you have a certain plan or a financial plan, like it will help you walk with like in a tunnel vision that will take you to the target that you want. So, because when you are just dealing as a restaurant owner, you're dealing with a lot of variables. You're dealing every day. You get new decision that you need to take, a lot of challenges that you need to deal with. So, when you put a well laid out plan with help of professionals that they understand exactly what are the restaurant that can face that what are the challenges that can face your restaurant, and by saying it like this plan, it's not just a plan or a generic plan. No, it will be a customized plan based on your location, based on your like income, based on your customer base, based on your competitors. We analyze everything around you. And once we start doing like our SWOT analysis, like strengths, weaknesses, opportunities, threats that faces your restaurants, we start putting that into actual financial plan that will help you get there. So if we are talking about like um, this, if we're focusing mainly on just like getting day by day, paying our expenses, and not just focusing on what really matters, um it will drag you. Like there is a saying that I've always like been a fan of, is like you cannot work on the business and for the business. As a restaurant owner, you're the one driving the ship. You need to make sure you understand, you see the whole vision, you see the like the long-term plan. Like if you are working on the business yourself, if you are going in the kitchen every day, that's a good thing. This is it keeps you connected to reality, but at the same time, like you need to make sure that to disconnect yourself a little bit and look at the big picture. Okay, so and by putting a financial plan for you, especially when you start a new restaurant, it can help you understand where you're heading. Like what's my plan for this year? What's my plan for the next year? Okay, you start having like setting certain goals that will take you, like from one step to the next step successfully. Like so this is one thing. So have if you are struggling with unexpected expenses, like please share it with me. I would be more than happy to answer that. All right. So moving to the next point, like do you need help figuring out your break-even point? Okay, so this is the break-even point or the break-even is one of the like trickiest things. And you can, like a lot of people, they don't understand how to calculate that, what is the most, like what are the things that I should include in my expenses? What are the things that are considered our fixed costs? They are not part of your break-even point. All right. So, and by break-even here, we are talking we're going to go more granular level. We're going to go on into the level of menu items. Okay, so any item on your menu, you need to make sure that this item, it covers certain percentages of your cost. So if let's say if you are we're gonna take a very very like small version, like if you have an appetizer for $10, okay, $2 out of this, like it needs to cover your fixed cost. Like $3 out of it, it needs to cover like the main cost of this item. Okay, so and $2 goes for the labor. So you're talking about, like to make your break even, or the break even, I'm just putting it in simple terms, like the break even of this item is $7. Okay, $7 is, like the cost that you cannot lose anything. Your margin, like depending on which type of restaurant you are, because we cannot have a generic view on this. Depending on what type of restaurant you are, your margin can be fluctuating between 15% to 25%. This is the margin for restaurants. Okay. And if let's say if you are a fine dining restaurant or upscale restaurants, their margins are actually between 15 to 20. Fast food, their margins between like the 10% to 15%. So this is the amount that you add on this item. Okay, so depending, like if your break even or your cost, for, like is $7, you need to add your margin again to avoid having slim margins. Like so a lot of restaurant owners, they barely cover, like by like a cent on the dollar, like so, or it's very very low. Like you want to be competitive, but at the same time, you don't want to be out of business. So you need to make sure that you anticipate, like for uncertainties, you anticipate for expenses that you are not ready for. All right. So the break even, this is just to simply put it, but like again, what we do is we analyze on the level of every item on your menu, and to make sure that every item you have in there covers your break-even point and your margin as well. Okay, so the last one, not sure how to approach suppliers for better terms. Okay, so like this is understandable. Some like some business owners or restaurant owners, they are tremendous in they have very good people skills, they have very good negotiation skills, like but some others, they are not really good with that. This is not their forte, not their strengths, like so we can definitely help you like with this point. If you have a problem in communicating with a certain vendor, you feel this vendor is very popular, you want to use them because they like they give you better quality food, they give you better quality supplies, It's understandable. But at the same time, you want to work with a supplier, first of all, is on your same level. Okay, so if you're working with a supplier that is higher than you, like they will always have the better deal. Okay, and you will not be able to negotiate anything with them. But when you're working with a supplier on your same level, this is where you can negotiate good prices and you can work with them on getting, a better term. And this is will help you eventually with the money reserved on the side get to a better point, like pushing you to the category of better suppliers. So this is how you scale up. You don't start with higher expenses. No, you start with someone that matches your income, matches, like you want to fixate that expense at that level. Okay, and then you start scaling up when you start having better margins, and you can start having better suppliers, and this will happen eventually, of course. Okay, so this is one thing that we can definitely like help you with. If you don't know how to approach the suppliers, if you don't know how to, what is a better strategy that you want to use, so we can provide you with certain scripts that you can use to, certain techniques that you can use to negotiate with them and get them to accept your terms with, like open arms. All right, so please, I'm here to help. Don't hold back. It's a great opportunity to get personalized advice. I would be more than happy to answer any of your question. So, you know, like all right. So I guess there is no more question, but again, thank you so much for your time. So I really appreciate you, like for everyone that joined us today. And again, like cash flow doesn't have to be a source of stress. Like you don't have to be to navigate it alone. If you're ready to take control of your cash flow, let's talk. So book a free profit and cash flow analysis with me, Mohamed Karmous, today. I will review your financials, identify cash flow gaps, and create a plan that ensures your restaurant thrives. All right. You don't have to do this alone. Let's work together to make your cash flow work for you, not against you. All right. So, guys, don't forget to download my free ebook, Seven Financial Mistakes That Put Restaurants Owners Out of Business, for more actionable insights. All right. So, thank you so much for joining today. I hope you found this strategy helpful. If you enjoyed this session, don't miss next week's live, where we will talk more about another major challenge. I'm pretty sure you're gonna like that: managing food costs and inventory. All right. So until then, take control of your cash flow, stay confident, and remember, you've got this. And I'm here to help you every step of the way. All right. See you next week. Enjoy your weekend, guys.